Yo, what's up you guys, welcome back to a new video, and today we're going to talk about why I think that the Feds are less likely to hike the interest rates tonight, and I'll give you all the information there as well. Now let's jump straight into it, but before we do that, let's see if you got any questions that came up. First one we got here is from Nuke Duke saying, thank you Neo, can you please elaborate more on fundamental news like PMI, PPI? So I have done a video on that. If you go through my YouTube, you just need to search in your fundamental. This is the video that you want to come to, and I have sent it to you. I've replied to your comment, so it should be there in here also. There you go. And then next one over here is from Kian saying, I was watching the video, my dad came to do research on it to find that you won't find any FSP number for these guys because it was advertised in South Africa. Couldn't find it as well, any info. It's a scam. Yeah, your dad's a smart guy. It is a scam. Stay away from any person that are promising some hefty returns, especially on Instagram or on Facebook. And then what else do we have here in the books? Adult saying nice content. And then that is basically it. So let's speak about why I feel the Feds are less likely to hike the interest rates. Now, in order to understand why the Feds hike interest rates, we need to understand why the Feds basically do it in the first place. Now, there's a indicator tool or a tool called CPI. Now the CPI is used to measure inflation. Now to put it to you in layman's terms, right? If inflation goes up, Feds hike rates, or let me just say rates go up. Right, so you got when inflation go up, rates go up, and when the rates go up, the dollar index increases in value as well. So they got DXY goes up, right? So we got these three that basically walks hand in hand with one another. So when inflation goes up, the Feds are likely to hike interest rates, and then the price of the dollar index increases in value. So the reason why the Feds are more likely to hike interest rates is because the only tool at the Fed's disposal to bring down inflation is to hike interest rates. Now the reason why interest rates are being brought down is to encourage consumers to start spending more. That is what's called the consumer spending index. Now the reason why the Feds hike interest rates is to discourage consumers to go out there and spend less so that inflation can come down. But we're going to get to that. Now, when inflation goes up, interest rates go up. Now, why does the dollar index go up with this as well? Now, when the Feds hike interest rates, then this attracts more investors, because any investor out there is going to put their money where they're going to get the highest return. So that means because of a lot of investors that's being attracted to the dollar index, and people are investing and investors are investing, then the price of the dollar index increases. Now, if we take all of this and we basically just flip it around, that basically means that when inflation, we're going to clone this, and we say that when inflation goes down, number one, the rates go down / paused, or they pause it where they where they go, we're not going to hike the interest rates, which is something they're more likely to do because that's how the rich stay rich and the poor stay poor, right? So then we also have the DXY going down, right? So we have the price of the dollar index going down. Now why does that happen? Because investors need to keep investing their money where they get the highest return. If the dollar index, if the Feds are not going to hike the interest rate, that means they're not going to be making money, and they go and look at the next best thing. Now, why do you think, by now you should have an idea of why I think the Feds are less likely to hike the interest rates. Let's clear the chart. Now, we can firstly see here, based off the Dow Jones' estimate, based off Forex Factory, they are estimating the Feds basically to come through and hike the interest rates by a quarter of a basis point, which is a 0.25. However, I don't think that is the case. I don't think that's going to happen. I think the Feds are going to keep the interest rates as it is at 5.25%. Now, why do I say so? Remember when I said when inflation comes down, the Feds are less likely to hike the interest rates, meaning that the dollar is more likely to move to the downside. If you look at this month-over-month inflation report that we have over here, you can see here from June month of 2022, inflation has been steadily going to the downside. And we can see we are basically sitting here at about 3% from a 9.1%. This gives me a clear indication, because of the other information that's tied into this, tells me the Feds are not going to hike the interest rates tonight and keep it at a 5.25%. Please let me know what your comments are down below. And let's see what happens tonight, guys. Thank you for your time. And as always, cheers for the years.